Welcome back to the Halftime Report. Celgene down more than 35% this year. Jefferies says at 6.5 times 2019 earnings, the stock is trading at the lowest price to earnings multiple in its history. It's our call of the day, and for good reason. The question is it a good time to buy because of this historically cheap PE? Celgene.
You know, I keep looking at this, and I don't understand why it's down as much as it is, other than so much negative sentiment on it.
Well, because wasn't it like a one-trick?
It was a one trick, and they've been slow in having a pipeline that will grow the earnings meaningfully enough
like a
to justify it. Yes. But it's also, you want to say it's a quality-run company, but for such a quality-run company, they still wouldn't be dependent on one drug. I bought a couple of biotech stocks, one that I was in before, because they've come down quite a bit. Biotech, like everything else, pretty much gotten smashed. I bought Neurocrine Biosciences, NBIX. I owned it before. It's down from like 130 to 90, and the data is good on it. I own Zogenix. They're going to release data in the next couple of weeks. That's also going to be a star stock. And, so I bought ATNX, which is cancer drugs, a little more controversial. But I think you can find value there, and that's still where growth will be unimpeded by Fed rate increases.
Put up Celgene, guys, again, please. You look at that move. I mean, you got a firm come out and say the stock has never been cheaper in the history of biotech, and it's barely up on that news. And one of the reasons, because Kramer this morning was saying they're not going to meet their earnings estimates. Great. Hey, nice call. Look at the chart, the way the stocks come way down.
So within the last 13 months, the stock has made a 5-year high in October of 17 at 147 and a 5-year low more recently in November. To Jim's point, this is a company with their cancer therapy drug that's going to have the introduction of generics
in a few years.
And without the pipeline to offset that revenue decline,
that's the whole thing he was saying.
They're not going to be able to.
Do people worry that they're going to make a big irresponsible acquisition? Is that part of the story here? I think they maybe have to.
Yeah, I think that's a fair point. I think that probably ultimately is where a company like this ends up. And listen, it is cheap. It's a PE below 10. Yeah, it's cheap, but to me, it could get a lot cheaper. So,
but what Jim's saying is correct, and it was my emerging markets argument that it's 6.5 times now, but it could very well be 10 times if they blow earnings. So it's the negative slide that's the issue.
So Jenny, you own Celgene.
Yeah.
What do you do because of this note?
We own it, we hold it, we love it. This is something that we look at as a cash flow story. It's got a 15% free cash flow yield. Between now and when Revlimid comes off patent in 2022, they're going to produce $35 billion of free cash flow on a market cap that's $46 billion. So we think there's just so much cash pouring into this. At some point, the valuation becomes more realistic with what, with
kind of
the
a
companies
punk I mean, you come out and say that things like the greatest valuation in the history of this space.
I mean, I didn't say that.
No, you know what I'm saying. Stock's up 65 cents.
Yeah. Yeah, it's crazy. It's super cheap.
Gilead has also declined along with Celgene, and I would probably make the argument maybe Gilead at this level versus Celgene at this level might be the better.
Well, they did make a bonehead
acquisition. Or you could own them both.
Right, they already did.
And there's somebody who borrowed $10 billion and could have bought back a large chunk of their stock because they borrowed for free, basically, at low rates, but they haven't. But this is Allergan, and this is Scott Gottlieb's impact on healthcare, is that he's moving up the pace of generics. And with Allergan, you have Restasis, you also have Botox competitors coming on. That stock's also incredibly cheap. I own it. It shouldn't be where it is. But
people aren't that happy with the CEO's performance.
Well, and they shouldn't be. I mean, he literally took defeat from the jaws of victory on the quarter. And in terms of their messaging and guidance, it has been. They should split the roles there. To me, no company should have the same CEO and chairman. It just shouldn't be.